GMGM, welcome to another Touchgrass podcast episode. Obviously, we've had Kaledora on the podcast before, and we will link that episode down below. We talked about the Ostium thesis. We talked about her ballerina arc. We talked about a lot of different things. We just had to have her on again with the rise and, well, sort of short downfall of commodities. Kaledora, first of all, congratulations on the raise. How has growth
Thank
been
you.
since?
Thank you. And thanks for having me on. It's been insane. We announced beginning of December. We're now first week of February. Last 2 months have been completely insane, as I think anybody who's tracking the markets is probably aware of the precipitous rise and then some very recent fall in metals prices. There was an article in Bloomberg that we sort of contributed to or were covered in last week, going over the rise in the crypto rotation into metals and just commodities more generally. And that has been like an extraordinary driver of growth for Ostium over the last month, especially. So yeah, we've seen just insane numbers. We had our highest volume day ever on Friday, crossing $700 million in volume, in 24-hour volume. Had a highest volume week ever last week as well, $2.6 billion in volume. Did almost $500,000 in fees, our highest fee day ever last week. So I think one of the days we crossed $100 million annualized in revenue. And what else? Yeah, we've just seen the same rises in certain metals like copper, which were hardly trading in, October, November, now doing like over $100 million in volume in a single day. So it's been a trip, but a really good one.
100%. I mean, I've been following you guys very closely since day one as well. And the way you guys are listing new assets, someone was like in our chat, we should long uranium soon. That's going to pop. And where should I long? And everyone's like, Ostium probably is going to list it soon. And you guys launched that awesome
2 days
video.
later. Yeah. Uranium, by the way, was our best listing day we've ever had by a factor of more than 10x. It was like the biggest blockbuster listing we've ever had. We listed it last Monday.
Yeah, I think that's what kind of one of the things that separates you guys from others in terms of listing and whatnot. But I want to take a step back, right? You have posted it a couple of months back regarding your conviction in people kind of trading more exotic assets and RWAs before, this whole parabolic kind of blow off top action that's been happening, where you said that people with on-chain capital would like other assets and access. How, like, when before all this it's cool to trade metals, how was that conviction like? And regarding what you've seen over the last couple of weeks, do you think we are kind of entering the topish territory for precious metals, or this is just a bump in the road of a super cycle? Like, I want to ask the founder in you, and as well as your someone who's observing the markets.
I try not to comment too much on price because I think that's probably not my job as a founder. I leave that to other people. But I mean, I won't comment on like the specific decline over the last like couple days. I mean, I think obviously there was like an insane run up, and you just had like, I mean, the volumes. If you looked at like the silver ETFs, the silver ETFs, like I think the main silver ETF did like $32 billion in volume at one point last week, which was more than the entire Q1 of 2025 they did in a single day. So clearly there's been like a huge just inflight into all of these metals as they've sort of like reached this speculative fervor. And when that happens, typically you see a bit of a blow off top and some kind of decline as people who are, over levered wind up needing to unwind positions sometimes. That said, I mean, I would say, I think it's the secular thesis in my personal view. I would say the secular thesis on like the commodity super cycle is certainly correct. And in terms of our positioning specifically, like the fact that we've benefited from this rise and sort of been like the key place to trade these assets and trade the real market price on these assets. And I can go into a little bit more on the liquidity model shortly, but is not an accident. And when you ask like, how did we know, or like, what did we think about what would happen writ large in these assets? Look, we started the company in 2022, like right before the FTX collapse. We raised our first like pre-seed in the worst market ever. We got laughed out of the room by most people who thought the idea that crypto natives with their capital on chain would want to trade anything else besides crypto was preposterous. But I tweeted this the other day, like, people often talk about pivot hell in startups, like when you're pivoting from one idea to the next. For a long time, we were in conviction hell and now I'd like to think we're entering hopefully conviction heaven area, but we were in conviction hell for a long time because we started building the company with this very, very, very strong conviction about what the world would look like 5 to 10 years down the line. And we had so much conviction, but there wasn't much feedback from the market. Like, it was really based on this like extremely first principles view on where the markets and like the space would evolve towards, with some small amount of like quantitative data. But as is often the case, like I think when you're building something disruptive, as I like to think we're doing, you often have to make a big bet that's based on some combination of like intuition and first principles thinking and common sense, even devoid of any like specific market feedback. I mean, like, and not to like overplay some sort of analogy, but I think to like a much larger degree, if you look at the advent of like, the personal computer, there was like no clear like market evidence to indicate that that's like what people wanted. Like, just had to kind of make a bet on that. So point being, like, it was not an accident. Go ahead.
Was this like, I think this kind of phrase has been getting popularized over the past week, where we are moving from the bits phase to the atoms phase. Was that something in your mind at that time?
Yeah, well, okay, I'll give you the like really big picture thesis when we started the company. So we started with a core conviction that COVID fundamentally upended something in the way that markets were working and the way that your average sort of, not just average, but like smart consumer would interact with markets. And what I mean by that is that the first phase of retail trading, the rise of like Robinhood and eToro and all these sort of like retail facing or like consumer facing apps, evolved in the period of time between the great financial crisis in 2008 and COVID. And what were the characteristics of that time? Zero bound interest rates, basically no inflation, very little geopolitical instability, especially when you compare it to sort of like where we are today. And as a result, the asset classes that did well and where you saw like retail demand was like largely in equities, and then in a sort of a cyclical fashion in crypto. And within equities, like the drivers of volatility were generally like, because traders chase vol, internal dynamics of that asset class, like people would be DCFing individual stocks, or like looking at fundamentals on individual stocks. And so the apps that evolved for gaining access to these markets were largely focused on single asset classes, like on equities, and then building out spot, and then building out options. On the Robinhood side, they built out an entire market on options that didn't really exist before they sort of popularized them for a consumer use case. Coinbase with crypto, you name it, like all the examples to sort of generally point to this this trend. And we thought COVID broke something in the markets fundamentally, where we thought the drivers of volatility and traders chase vol were going to be much more macro driven post-COVID. That COVID based changed the paradigm to a paradigm where interest rates would be persistently higher, or certainly less predictably kind of like, the Fukuyama, like the end of history thesis, like from the 90s. Like, I think was kind of like the end of markets, was like the end of volatility it was just like, okay, straight line up, like you put your money in the S&P and like, whatever, you try to bet individually on some stocks based on some few theses, but it's like the end of market history. And like COVID marked a change just generally across the board, not just in markets, but just in, also just like the world order, right? Like I think like you're seeing this like fundamental realignment of like the center of power shifting, like moving towards this multipolar world. And we thought that we'd have very strong knock-on effects on markets, and then as a consequence on the way that consumers more generally interact with those markets. So that you'd move towards a world that was where interest rates were much more volatile or unpredictable and generally higher. Inflation, same deal. Geopolitics, much more unstable. All of these trends of like secular trends that would result in the biggest drivers of volatility being macro and world events, rather than just these kind of like smaller, more granular dynamics like within an asset class. And so we thought the consequence of that would be twofold. One, that people would want to trade based off of events, so that increasingly people would use events as their triggers for like the events would play a more important role in shifting the market, because the paradigm shift would be much more dependent on like these big decisions, like who was elected. Before, when you had this kind of like end of history, kind of no matter who got elected, like, the stuff was basically the same, and that's like no longer the case. So much more event driven, and as well, much more cross asset. And we thought the trader of tomorrow was going to be somebody who wasn't going to just stay on one asset class, but that they would move between asset class fluidly as they were chasing volatility, and that volatility would percolate through the system in increasingly unpredictable ways. And so we thought the trading platform of tomorrow was going to be a place that integrated sort of like thematic, like macro and event-driven investing into the core product, and one that was cross-asset by default. And what I mean by that specifically is abstracting away the complexity that you typically get by needing to trade different asset classes. Like, you want leverage on stocks, you got to trade options. Then if you want to bet on commodities, you have to figure out how to trade futures, and very different sort of like margin requirements, or notional size minimums depending on the asset, the future that you're even trading, because some of them have like micro and mini contracts and some of them don't. So all that sort of abstracting all the complexity away, you could trade with $10 or $10 million in size on any of these assets through the same simple instrument, which we thought like a perp was the best primitive to do that, or perp-like instrument. And we thought that would happen basically, that this trend would occur in a fractal way. It would occur like in the big picture, sort of like macro for your like non-crypto native investor. More institutionally, you'd see more kind of like multi-strategy, like multi-asset class funds at like a prosumer level. And then even within crypto, that you would see people who cut their teeth and made their money within, DeFi and crypto, now starting to, not that they were like pivoting and dumping crypto, but crypto would become like a smaller part, one part of a broader portfolio, not necessarily because they were trying to like minimize their risk and hedge. Like they might actually still continue trading in the same crazy way.
I think all of us were really surprised when crypto bros started talking about like trading gold or silver. Do you think that's more
at all?
I think, like, do you think the thesis is that since all these opportunities are now available on chain, this is why the average crypto investor is more aware about different things to trade? Or do you think it's more like crypto markets are bleeding, so this is like the new shiny thing? How is that shift for you, and how have you guys been picturizing it?
Also, is the rotation just from crypto bros to gold and trading commodities, or are you seeing someone, in the traditional world also exploring these? Like, I know you're tracking wallets and kind of comparing, is there overlap between other platforms? Is it the rotation just from crypto traders, or is that like a net influx of new people coming on chain as well?
Okay, good question. Maybe to answer the first question first, based on everything I've been saying, like that it is not like, unless we just got insanely lucky and it all just like happened to work out this way. And it was just like, we put the assets on chain and like now people want to trade them. Like, no, we like built the platform. Like we started the company with the core vision of like our first beachhead market was going to be DeFi natives and giving them exposure to traditional markets, especially starting with commodities, but ultimately going into like FX indices, single name stocks, like all of the other asset classes that are not currently available, and making that easily available in this like easily tradable instrument, sort of perp-like form. So that was very deliberate. I was not surprised at all. If anything, I was actually surprised by how quickly it happened. I think our thesis wound up being even more true than we could have possibly anticipated. And the flip, I think the most jarring thing for me, like personally as a founder, was going from being highly contrarian and starting every conversation, every investor, every potential partner, everyone I talked to, I had to first convince them that like this vision of the world that we had was like going to become true. And like, we knew there wasn't much evidence to like indicate that was the case, but we're like, people are going to want to trade this stuff. There's going to be like massive demand for trading, like, the NASDAQ and gold and oil and you name it on chain, and kind of like having to fight that uphill battle to flip of a switch, almost like in this kind of jarring way. Everybody was on the same page. That was no longer a contrarian take. And then the question went from being like, okay, sure, you're building this, but like, is there really demand, to like, oh, there's obviously demand. Like, why are you guys going to win? So I think that answers probably your first question. And then your question, sorry, KG, can you just remind me the sort of crux of your question?
Yeah, it was the rotation simply from crypto people,
okay.
or
who's trading? Yeah. So look, like the beachhead market and our core user base right now, these are like crypto natives. They're people who have a large proportion, like I would say plurality of their capital on chain. And for a combination of reasons, the reasons differ based on where you are. But don't want to off ramp their capital. They don't want to put it on a traditional broker, either just because they don't trust it. They've maybe been burned before on various centralized exchanges, or they live in a jurisdiction where the broker access that they have is they typically have to go through like a CFD broker. That would be the only way they'd really be able to trade like any kind of, you know, derivative instrument on these underlying assets. And for a number of reasons, that's not, you know, that they don't really want to go through that. They don't want to go that way, because typically a lot, especially in these like, you know, various offshore jurisdictions the counterparties are a lot less clear. The small, especially like the longer tail of sort of like smaller brokers in a lot of these offshore jurisdictions have effectively like full control over your account, and they have full discretion to close your account. In many ways, it resembles sort of a sports book in many ways, where like you become unexpectedly profitable, they can just close down your account. And that is obviously not something that most, you know, DeFi natives are the most attuned to concerns around that. But we also have a very strong conviction that there's ultimately a much larger market of people who currently use these instruments because they don't have a better alternative, but who are keenly aware of the downsides or the sort of risks of facing off with that kind of platform, who would switch when presented with an alternative that is like incredibly neutral and is transparent, where they can track all of their trades, where they can deposit and withdraw instantly using stable coins. They don't have to trust sort of a centralized custodian. They face off directly with smart contracts. So that's sort of like the broader vision. But in terms of our core user right now, like, yes, these are DeFi natives. Many of them are, I would say, have traded some of these traditional assets, but in a brokerage account, but never in like really large size, or they had more restrictions and they were somewhat uncomfortable with it, but they're already like, they have a lot of money in DeFi. So it's not to say that it's the first time that they're trading traditional assets. It's the first time that they're doing it seriously, because they didn't really trust the places where they were before. And then they have this capital on chain that they're ready to deploy. But this is just the first step. And like, I really want to emphasize that our market is gigantic. Like, it is huge. And I think about users in concentric circles, where you start with the user that's kind of like the most proximate to like the product that you have right now, where the fewest number of changes have to be required. Obviously, you're always iterating on your product, but like where your core product really satisfies the demand. And then you go like, you know, one circle out, where it's like, all right, a couple things are slightly different, but the core of like why they would use your product is the same, to the next circles out. And the like full expansion of that concentric circle is massive. It's like, you know, I've been saying this a lot, and I'll like keep saying it. There are going to be several $10 billion plus companies that are minted out of this like transition. And we plan to be one of them.
I think that unlock happens, like how I think about it is not when the companies are being exposed to TradFi, but TradFi just saying perps are just better instrument, and I need to be more exposed and using perps rather than any other kind of instrument. And I think we are seeing that change. I've seen Kathy Wood going on CNBC and talking about, you know, perps product, equity perps, and even I think big research, Citrini also, they're also talking about equity perps right now with the whole metals kind of run. But I want to ask you, because you're still kind of crypto native and you have that audience, and perps are still the best business in crypto, maybe outside of Tether, and they still are the biggest revenue generating protocols, and they're always in the top 5. Do you think like because of this whole run and your conviction in other assets and RWAs, do you think like, are you missing out on the crypto side of the business, or you're thinking let's just double down on this one thing, because as you said, the market is huge for this and we want to be known for this, or crypto is still something you want to focus on in a much bigger scale?
Yeah, it's a good question. I mean, look, I think people come to us to trade real world assets. Like, there is some trading of crypto on Ostium, and like, yes, we have like some of the major pairs, but it's not why people come to us. And I think in the short term, you could make an argument that, yeah, we're definitely like missing out on marginal revenue that could be acquired from like people wanting to trade crypto. And yes, we make that possible, but we haven't really leaned into that, because I think your most limited resource as a founder and as a company is actually not capital. If you're good at raising capital, it is focus. And like, if focus is the most limited resource, you have to be very thoughtful about defining your DNA of like what you are as a company and what you're trying to achieve, because you can't do everything all at once. If you try to do everything, you'll do nothing. And I often see companies trying to do this, right? They try to do everything, and like it winds up destroying their business. And we think that's a mistake. I think there's a time to obviously like add more product lines and have like, you know, add more to what you're doing. But I think we are like, I mean, every protocol in crypto, and like I count us among that, are still really not there in terms of like having the ideal product that is actually going to be able to go and convert like millions of consumers who are not crypto native today. Like the bar is still not where it needs to be. And I really, truly, I say that about every product, and like I say that about our own product. There's a lot that we need to continue pushing on to actually make the product like accessible to somebody who like doesn't have all their money on chain today, and relentlessly improving this core product to expand to a wider and wider set of users is 10 times more important than like marginally improving the user, like the experience for like crypto for a crypto user. Like it, and ultimately, like, look, the market that we're building towards is like way bigger than the existing crypto perp market. Like it's just bigger. So short term, yeah, we're probably marginally missing out on revenue. Like, yes, but I have strong conviction, and I think we've made enough big, strong bets in the past that I'm confident in my conviction here. It would be a waste of focus, and the right thing for us to do to succeed as a company and protocol over the next, like, you know, 3 to 5 to 10 years is for us to really just focus on like improving the core product and making this like much wider swath of assets like tradable on chain.
Yeah. One thing that I do want to come back to, Kaledora, I think all of that makes a lot of sense. And there's obviously like this big three emerging in the perp space. And, you know, you're talking about the concentric circle thesis. Do you guys do like a lot of wallet tracking? Like on crypto Twitter, some days it seems like no one's trading on Ostium, and then you check on DeFi Llama, volumes out the charts. What's going on here? Like, are hyperliquid people trading on Ostium? Like, is that something that you guys look into?
I would encourage anybody who really likes wallet tracking to look into what wallets are trading on Ostium, like, and their overlap with wallets on other perp protocols that shall remain unnamed. I think one funny feature, which was certainly not by design, I think it just kind of wound up by happenstance and through some kind of path dependence. It is kind of a funny thing. Like there are a lot of like really big wallets that trade on Ostium, and like traders that are moving significant size, but they never talk about us. They're very quiet. I've sort of like somewhat jokingly said that there's like, there'll be like maybe we should host like an Ostium Anonymous. It's like, you know, I'm 0x, like name your competitor maxi. And today, you know, I have to announce that I've been trading on Ostium, and I've made like, you know, $3 million in profits on gold. Yeah, people don't talk much about it. My job as CEO is to be like bull poster in chief. So I post all of our metrics, and I'm happy. And obviously it's my duty to be the flag bearer there. But yeah, people might be surprised if they do a little bit of digging. I think it's great. I actually am like, I think it's excellent. I think it's way better to be underestimated and dramatically over deliver than to be way overestimated and like under deliver. And I think we've like consistently like way over delivered. So I think it's kind of cool to be like a little bit slept on. I also think it makes like the repricing like much more aggressive when it happens. But we're I think much more quiet than some of the other people out there, but you might be surprised by what you find if you dig into our metrics.
Yeah. And then talking about sort of user demographics also, I see a lot of sort of bull posting coming from the West. Are people from the East also trading on Ostium? Like, how does your user demographic look like?
Yeah, good question. We haven't done like a lot of really intense, like, you know, like marketing or anything in APAC, but we've actually seen a ton of our users come from there. It's almost like, I think the metrics change every day, but somewhere maybe conservatively, I'll say like 40% of our users are APAC, and the volume is like coming from APAC. So a lot of it is especially like in Korea, Japan, Singapore, and a couple other smaller countries, or countries that have smaller percentages than those top ones. So yeah, it's interesting. I would say maybe, you know, like the Balaji like analogy of like like red tribe, blue tribe, gray tribe. He kind of talks about like the change in this was like a Balaji take from like 3 years ago that he was like really on this train, but about how in like a pre-internet world, the uniting factor among people was like most commonly geography. Like you knew your neighbor, but you didn't know somebody halfway around the world. And now the internet has like completely changed that, where you actually might share a lot more in common with like somebody who lives halfway around the world, but like lives in another, urban area than you do with like the neighbor who lives down the street. And so I think we see a little bit of like he calls that like gray tribe. And I think we see something somewhat similar among our users. Like our users have the uniting factor among them is like, obviously they're like Ben between like, mid 20s to early, late 30s or early 40s. So this is like the typical crypto user. They made the majority of their capital in any of the last like, 2 cycles typically. Most of them are not like first cycle, not like original ETH guys, but like last 2 cycles. They have a plurality of their capital on chain. They're somewhat skeptical moving their money off chain. They have experiment, all these, I could go into like, a lot more detail, but yeah. I could break down a lot of excruciating detail, the like factors that make up this core like ICP. But geo is not a super determining one. Like these people are spread out across like I'm not gonna like, say this publicly, but like we know our top 10, 20 users and like they're all over the world, like all over. They're not all in one place. So I think really where you see clustering is kind of more of this like low to middle end of the spectrum. That's when you see these clear demographic trends evolve. It might be like one person who like trades serious size, then has like a following of other people who like listen to what they talk about. And then they're kind of like smaller, longer tail of people are clustered in their geo and will trade and we'll see coming in waves. But yeah, so I would say user number is almost 50% APAC. Volume number, because it's so skewed towards whales, is more geo-distributed than that.
That makes sense. I think the next demographic you need to target is Indian moms. The day you can teach them to hedge.
I saw this crazy data on like the amount of gold that can be held by like Indian women, depending on whether they're like married or unmarried. I was like, that's the most insane. Like
me and KG have both have conversations at home about how much gold is in the house, and I think both of us have told them like, hey, you can actually hedge this, and it took us like 15 minutes. I think that's the core. It's like, how you have Korean grandmas trading crypto, you have Indian moms trading gold and Ostium.
I saw this online. I couldn't believe it. This is the kind of like, like pro-marriage policy that the West would be like floored by. But I think it's, you guys correct me if I'm wrong, but it's like 500 grams is the maximum amount of gold that you can hold as an individual if you're a married woman, but it's only 250 grams of gold if you're like an unmarried woman. I don't know.
I know that's true, but I've read some fact the other day that Indian households have more gold than the US or something. I don't know if that's true.
I would believe that. Based on anybody I've talked to, like in India, I've been told there's insane levels of gold.
Yeah.
So
they're all celebrating the gains. I don't know if they'll realize it, but they are celebrating. But yeah, Kaledora, the most important question for us that I wanted to know about is regarding the TradFi exchanges have announced that they're going to do, and they're going to roll out 24/7 trading. The first project that came to mind was Ostium, right? Because you guys offer in particular hours trading.
Yep.
How does that impact you guys? And can you kind of explain to our audience, like, what does the 24/7 trading bring actually? Is it like just for spot? How does that work? And how does that change your guys' approach?
It's going to be awesome. And the great news for any secret Ostium bulls out there is that our relative advantage is only going to grow, because for a lot of other dexes, like they have, they're not able to offer the underlying market prices because of their liquidity structure. Like through our RFQ mechanism, we can actually bring the very closest thing to the underlying market liquidity, which is why, like, especially people with size will trade on us. On a place, if you're like trying to rebuild natively order book liquidity for gold or whatever, you're trying to match the underlying market. Obviously that's going to take a very long time, or it's very hard to achieve. And so especially the larger the sizes that you trade, we're the only place that you could open up like, a single shot, like $10 million long on silver with like less than 6 basis points of like price impact. I know I'm just picking a number from like Friday. I was looking specifically at trades, but you've seen even like that was during a really high volatility period. So even better than that during typical normal periods. Point being, our differentiator has never been the fact that we have expanded market hours beyond like compared to the underlying market, which is a point of differentiation and is kind of a part of the sell for other sort of protocols out there. Our view has always been the underlying market is going 24/5 and then 24/7 sooner than people realize. And we think it's a feature, not a bug, to limit trading to the underlying market hours. Because look, like if I have a, multi-million-dollar position open on silver and I'm have that on a place where I know that they enable trading during the weekend, but I know obviously all the liquidity is going to drive over the weekend. What are my options, right? My options are, close my position because I risk getting liquidation hunted over the weekend and then reopen it on Monday. Super annoying to pay fees to do that. 2, keep it open and, meticulously track it and add collateral as needed, because you might have someone massively scale into a position of, it doesn't take a lot. I mean, all the liquidity dries up. It doesn't take a lot to like move the books. So either I could have the funding rate go crazy and erode my position dramatically, or the price can get wicked down and I might, be liquidation or stop hunted. So monitor my margin very closely and add margin. And third option is like do nothing and pray. We don't think any of those options are good. And we think it would be much better if you could just, touch grass over the weekend while the underlying market price is not moving, and actually just keep your position open and not be worried that you're going to get like hunted while there's like no liquidity.
Do you still have that view when, let's say, like when we last talked about when Hyperliquid had the equity perps and now all these different assets, they're not doing that much volume. But since then, I think that they recently have done billions in daily volume of commodities.
They're doing volume.
Does that change the impact of over the weekend or something?
No, I mean, look at the price over the weekend. Like you'll see the price goes like this, and then occasionally, if someone scales it, I mean, like literally last weekend there was a post that blew up on Twitter of a guy who like got like liquidated. I mean, like every other weekend there's a story like this. Like it's just common sense. Like the liquidity in the books like drops dramatically. Like it's just you can't open a position in the underlying market and like hedge it. So people are just like not going to make that market over the weekend. In anything close to the sort of like size and amount that they do over the course of the week. Anyways, I have to run, but it was really good chatting with you guys. And yeah.
Can I cover a last question? Yes. Our audience is going to kill us if we don't ask this. By the way, I love the fact that you use touch grass. I think don't pray touch grass over the weekend is a great way to market this. I think last question on our end, will we see an Ostium EVM chain pop out of this?
I can't comment on that right now. I all I'll say is that at size with or at scale with millions of users, like chain speeds will become a constraining factor. I think we have other more near-term constraining factors that are more on our sort of own pure engineering plate. So yeah, I can't comment more than that.
Awesome. All right. Thank you so much, Kaledora.
Thank you guys.
We'll catch you soon. All right. Bye.